time. Welcome, and I hope you guys are having a good evening so far. If you're on this call, you definitely know who I am, but it's always good to see you. If this is your first quarterly webinar, then you are not aware that we will post this, but we also will post the recording about a week out, and we'll send a summary of some of the lessons that we learned tonight. With us, we have a good friend of mine, Will Radford, but also a wealth of resources. So I will not give his full resume, but I will hit some high points that I think are relevant for this discussion. Will has over 2 decades of experience in commercial, residential real estate. He's a licensed contractor. He has done design. He has done architecture work. He's been from soup to nuts in every part of the process, from everything from single homes to joint venture projects where he's building hotels in partnership with the U.S. military. So he has a lot of experience. Relevant for tonight's discussion, after getting that experience, Will decided that he wanted to make a pivot and use real estate to help meet some of the objectives that he has in terms of his passion. So what I thought would be helpful is for him to give some insights into how he's done that, how you can do the same, and to just share what he's learned over the years. So with that, Brother Radford, I will leave it to you. I will turn off my screen, let you get rolling. Oh, I will say that before he gets started, he is actually in one of those passion projects right now. So he is doing his presentation from his business on a piece of land that he acquired, and part of that business is actually showcasing local businessmen and businesswomen in Nashville. So he's sitting in front of a painting done by a local Nashville artist that I think speaks to some of that passion. So I just wanted to point that out. Will, go for it.
Excellent. Well, greetings and good evening. Again, my name is Will Radford. I am an entrepreneur, a real estate investor, architectural engineer, as well as a lifelong learner. I am happy to be here with you all this evening, sharing some insights around how real estate helped me change my life and move out of a corporate space and into the entrepreneurial space, funding projects, and more importantly, supporting the passions that I have for both education and economic development. I think it's really important to start that I focus on talking about passion-driven projects and passion-driven profits, because I like to connect real estate not to just making money, but more importantly to making a difference and making money as a side effect of the difference that I make. I am one of the founders of Nia House Montessori School. That is a private Montessori school in East Nashville that serves 60 families from the surrounding Nashville area. I am the sole owner of AMPM Solutions Incorporated, an asset management and project management corporation that serves as a partner to municipalities who are doing public-private partnerships. I spent 10 years in the world of public-private partnerships with the United States Army, designing and developing hotels on military bases. A lot of people don't know that the Army, when they send soldiers from base to base, getting signal training, technology training, officer training, they're not staying in outside hotels, they're staying in private hotels that are built on a military base. And in 2008, 2012, 2015, I was a part of the corporation that had that sole contract, over $1 billion across the United States. And for 10 years, I did the work of both designing, managing, and operating as an owner of the Eastern portfolio for that project. Great wealth of experience, but I learned quite a bit that helped me transition from that corporate role into a private sector opportunity, working as my own company with the Metro Nashville Airport Authority and structuring and assisting them in the hotel deal that was just announced in the past year, $130 million a Hilton hotel that will be at the front door of the Metro Nashville Airport. And I was a sub-consultant to the airport authority directly. So I sell the knowledge that I've acquired over the years in structuring and creating partnerships that generate profits without necessarily being the owner of the actual property. Lastly, I am in the Local Distro. The Local Distro is a corner market concept in the Germantown, Salemtown area, which is a piece of real estate that I've purchased that has 3 lots that has one building with many focuses. primarily is focusing on the distribution of local goods, which means we work with women-owned businesses, minority businesses, veteran businesses to support them in a distribution arm of their business concepts. So we have bakers, we have tea makers, wine makers, soap makers, body butters, lotions, you name it. Anything that is regulated by the health department that can be sold publicly, we'd like to give those entrepreneurs and foodpreneurs use of this real estate to demo and project the sale of their business. And we do that through a number of creative ways that work for us all. But the topic primarily for tonight is leveraging your access to income to create real estate, and most times a real estate portfolio that generates wealth. So in 2013, I began to see that Nashville's moving forward and it was tracking in a way that I felt would, I'd be left behind if I didn't get in the game soon. So one of the first notes I tell you about real estate is not actually about how much money you have, it's about how soon you enter the game. A lot of times people misunderstand the amount of money as being a barrier to entry. But when you enter the game, you immediately get to take advantage of the real estate returns that are, in terms of land, that's accumulating of sometimes 10, 12, 18% per annum without actually even improving the project. So in 2014, I was purchasing real estate with the sole intent of just holding it, similar to a stock or mutual fund, and just allowing that 10, 12, 18% to accumulate for the next 7 years. And what happened in that time is not only did it double, triple, but in some cases quadruple. And so for the people on this call, one of the first and most important things I would ask you to take note of is time, and recognizing that time is the greatest factor as it relates to real estate in a city like Nashville, in a state like Tennessee. Geographically speaking, there are only about 6 markets across the nation that are moving at a higher rate than Nashville. So Nashville being in the top 10 is one that the sooner you get involved, the better that you would be as it relates to real estate. Now, the type of real estate often is a question for people. Is commercial? Is it residential? Is it a single family home? Is it apartments or multifamily? I really think where you start is dependent upon what your risk tolerance is. Now, one of the ways I like to coach people that I consult is to begin to think about your pool of resources as 2 things. One is fruit and the other is seed. And to begin to separate your fruit from your seed is really important when you have resources to be able to determine the parts you can afford to put at risk and the parts that you can't afford to put at risk. And once you have determined that, I think it's really, that's when you can really begin to get busy and do the most to actually get work done. Separating your money into the 2 pots, the fruit and seed, that's one of the first and most important recommendations, because it allows you to then make decisions without the fear or risk of loss. Anything that I've designated as seed capital, I'm intending to put it in the ground. I'm not measuring how much seed I've kept in the cupboard. I'm not measuring how much seed is still on the shelf. I'm intending to put this seed in the ground. So for the person that that's 10,000 or 5,000, or for other people that's 100, 200, or a million, the point is that once you've designated fruit from seed, your goal is to deploy that capital in a responsible project, something that you've learned and studied and you've measured the risk. And you want to get it in the ground as soon as possible. Now, that's the capital side. The other 2 of the 3 things that it takes to make any real estate transaction work is expertise and then opportunity. Opportunity is primarily land. It's really important, if you want to become a real estate investor, to get busy learning how off-market deals work. And that's important. Sometimes it's through realtors that you know, but often it's through you really beginning to study a specific area. Unfortunately, people think buying anywhere is a logical, good approach. I actually disagree with that. I think you would be really served well to focus on one geographical area and say, I'd rather own 10% of something in the one area I'm more knowledgeable about than 100% of something in an area that I'm not knowledgeable about. I think it's really important to be able to measure the risk as it relates to the seed capital that you've designated, and to put it into a place that you're most knowledgeable about, and to not be lost in, well, it's a higher return if we go to Smyrna, if we go to Laverne, you can buy it cheaper because Columbia is really growing. If you're not knowledgeable in those markets, or you're not working with someone who's on the ground in that area and competent about some of the things that make a difference is where the city's spending money. So if you're not conscious of where the city is investing in sidewalks and these different things, then you may be misunderstanding whether it's really an opportunity or not. Real estate is about separating the capital into what's seed and what's fruit, about being competent in areas that you want to invest, and beginning to measure the risk and opportunity, not in amounts or values as much as it is in what your competency is. So it's better to be knowledgeable in an area and have a lower percentage with greater security than to take bigger risks somewhere that you're not knowledgeable, and you can become the example of what not to do. Lastly, I think one of the points that I would make as it relates to real estate investment is that it's something that doesn't happen overnight. Often people will bring pots of money and say, well, I want a settlement, I've got this money and I want to be able to turn 100,000 to 200,000. And what can you do in 4 months? I said, nothing, because I'm not intending to work and just help you multiply money. It's my goal on this call and in every talk that I do to help educate and try to create a group of people who are competent and knowledgeable about the risks that they're about to take, and to learn it in a way that they can repeat it and invite others to do it, so that they can kind of expand not only their portfolio, but how they help other people build a portfolio. Some examples that I would talk about as it relates to that is the building that we're in now. So the Local Distro, again, sits on 3 lots, and it's a 7,000 square feet. I'm sorry, that's a different project. I'll talk about the Nia House Montessori school project. So it's on an acre of land on Dickerson Road, and that property I purchased to be a hotel site. So it's my intent to relocate the school that's currently there and to put a hotel on that site. The reason that that's possible is because 2 years before I was able to buy that site, I was able to study what the city was doing in that area, identify what were the pieces of property that were not yet spoken for, separate some seed capital, and then work with a group of people to get to the owner of that property. And once we were able to have a face-to-face conversation with the owner, we realized that they had been trying to sell that property for a period of 2 years and just had a person that was actually squatting on the land and impeding them from being able to sell it. So again, the value of knowledge is actually more important than money. So we were able to purchase that property at a considerable discount because the owner was in a distressed position ready to sell. Again, my point in sharing that story is to be clear that sometimes the amount of money that we have is less important than the amount of knowledge that we have in a specific area, because the opportunities are really connected to the knowledge and the competency we have about what's happening in an area. Different to that Nia House site, one of the things that we did here is a lease purchase agreement. So sometimes, again, we have resources, how much money you have is unimportant, because the person who's trying to sell it may want a specific number. So the property owner for this project, he wanted 30% more than the market offered for it. And so my agreement was, I will pay you the number you want, but it'll be on the terms that I want. And so this is a tool in real estate negotiation and deals, non-conventional deals, that really help to give everybody what they want. He wanted a specific number. His family owned it for 125 years. He wanted a specific number that lined up with that 125 years, however that made sense to him. In my opinion, I will give you what you want, but the terms that I want is I want to buy it over a period of time. So that meant I'll do a lease purchase and buy it at the 48th month. What that does is immediately give me a period of time to structure the right deal. But more importantly, it gives me 4 years for the value of the property to improve and increase so that he can get the number he wants. Plus, I'll have some equity in the project when we actually close on the project. So again, some of the things I'm telling you are common knowledge for some of the people on the call, but the other pieces are things that I've learned that I feel help make a deal happen. And the last thing I want you to know is that money is kind of the last thing that it takes. First, you have to have expertise or hire expertise. Second, you have to find the right opportunity. And then lastly, you would get the money. And in a city like Nashville that's growing the way it is, with lenders wanting to make money as well, there's also a lot of access to capital through lending institutions, so that some of the money you actually have may not even be required to make a deal work if it's the right opportunity. So I'll pause there. I don't know if that's 22 minutes or not, but I see the first question came in, and I will take those as they come, and I will read the question to make sure everyone sees the question. How about for markets that are typically very expensive, like DC, New York, LA, people want to stay in those areas? A great question. Again, I think my first answer would be either you yourself or you have to employ someone who has the expertise and competency of those markets. So a very expensive market, if I were trying to deploy capital in DC or New York, I would want to start by buying micro shares in a project. So I may find, I think 10 and 12% is a good place to start, but I wouldn't be afraid of 5 to 7%. So if you were finding a large deal in New York or LA, and you could get access to own 5 to 7% of a large project, you may not be able to live there, but one of the first things you could do is begin to gain access to the people who are making that deal happen, the people who own the other 93%, the other 88%. All too often, that's the way deals are done off market. Someone who's in the group of investors, whether they're a micro investor or macro, if they have access to the banker who's done the deal, if they have access to the realtors and the sellers, buyers, that's the place where you begin to discuss and share your intent, so that people in those larger markets who have access to those larger deals, who may accept your 5 to 7% in deal one, would be interested in inviting you to participate at 10 or 12, 15 or 18% in deal two. And that is the 3-4 year strategy to how you get into that market and be able to participate at a 50 to 60%. And at that point, you really do have the opportunity to either continue growing incrementally in those larger markets, or deploy that capital back into a smaller market like Nashville or something, Dallas, where that same 50% in New York or LA can buy 100% of something in those markets. So a very good question, and that would be a intentional and deliberate strategy about how to grow in those. If the question becomes, well, then how do I meet those people? I think similar to creating a business plan, you could create a one-page intention statement and then begin to share it with a lending institution, similar to a cold call situation. Believe it or not, banks who have capital like to connect people with capital to opportunities. And that's a way that I have done a tremendous amount of business on Dickerson Road when there was no one moving capital in 2012, 2008, when the markets were tight. Bankers, understanding what your interests are, would be able to pick up the phone and call you because they knew they could get a deal done with someone when other people, because you made your interest and intent known. Other questions?
Well, I actually had a series of questions, and guys, if you're on this call, we wanted to open this up earlier than usual for questions, because this is an area that people typically have less experience on than some of the other webinars that we cover. So, well, I have some that I prepared, and then a couple that were submitted in advance. You kind of talked about, if you could expand on how you meet some of the people who would have access to those deals. That was definitely one of the ones that was submitted. The next one that was submitted was, a lot of the people who were kind of in the group are, the best way to put it, they have the potential to do more than just, hey, I bought one rental property. So they have the capital to, or are interested in, well, how do I do some of these larger projects? So one of the question was, could you break down the components and the parties who are involved in some of these more complex projects? Who do you need on your team to get started? That was one of the questions.
Excellent, excellent. So I'm going to answer that question assuming that we're talking about Nashville still. So in a city like Nashville, and this is the last question that you asked, Brenton, who do you need involved? Again, the first and most important person, in my opinion, is a developer, because a developer is a person who is studied the land opportunity. And so, for example, this is not a possibility. This is an actual, and Brenton, you have to tell me if I'm doing something wrong here. It's actual project on Trinity Lane near the riverfront expansion that is still being petitioned to the city. There is 8 acres of land that sits on the hill. A church owns it, and the church has the right to build 27 homes there and a 25,000 square foot commercial facility. It is very clear the church has no money. One of the ways that I found that project was to go to the Metro SP viewer. So SP is a specific plan. That's a type of land use application that exists in the city of Nashville. It says that someone who owns land is asking the city for permission to do a specific plan on that piece of land. And today, right now, 30 minutes after this call, you can go to metronashville.gov and look up SP Viewer. That's Sierra Papa SP Viewer. And then in that, you can look up any location. It'll show you all the SP applications. What I would be looking for is SPs that were applied for, say, in 2008, but were not constructed yet. Because in that you find, here are people who have the right to do large developments, which that's one strategy of land development, is I know I can't afford to do construction. I don't even have the desire to, but I do the work to get the land use changed, to develop the opportunity to make a larger project. And then I sit on it until I find somebody who has the capital to do it with me. Those are absolutely the type of deals that I look for. Someone that is not just looking to sell with some astronomical number, but someone who has done the work and they want their fair share. So in this project, for example, what the church wanted is enough money to build them a church. So they wanted to trade the land for the church. So we negotiated the deal and said, in exchange for me building you a 7,000 to 10,000 square foot church, I will get use, access, and ownership of the 27 homes and the remaining 18,000 square feet of the commercial space that was approved for this site. So what I've just given you is a way to find the projects, a criteria for selecting the projects, and some insight into how you negotiate with owners who are savvy enough to do their own work to create the land entitlements. So understanding that the resource I just gave you would be someone who is knowledgeable and has done the work to prepare their land to be sold at a higher valuation than it was possibly when they purchased it. And so, Brenton, I hope that answers the question as a concrete, real, tangible way for someone on this call to begin pursuing that. Now, by all means, I can talk about the pitfalls, but I also want to touch, well, who are the people that you need? So I, as Brenton, I'm a licensed contractor, commercial and residential. I'm an architectural engineering graduate from Tennessee State University. So I have architectural license and capacity to design projects. So for me, my goal is to become a one-stop shop. But in any project, you would need each of those components. You would need a contract on the land before you ever spent $1 to study it, or to, I'm sorry, we locked the door.
He is in his business, you guys. So we value his time, but he is actually, this is one of the, I was asked at the beginning of the call if this was Taco Tuesday, if you guys are in Nashville, that it's one of their busier days. So he's in it, but we appreciate you.
Yeah, but we're closed now, so we get to lock the door and I can keep going. But each of the people you will need to make a project work, architects usually first because they're part of the visioning process. They can take the raw dirt, they can do a land study to determine and develop what legally can be constructed or provided on the property. So there's a number of things they have to study. I often encourage people to not skimp on the architecture. That's one of the things you're going to need when you go to the lender or when you go to the bank. You're going to need a set of plans that help you have a higher value. For example, if I was buying a lot that allowed me to build 2 homes, I would want to be able to show the bank 3 things: the existing land, whatever had to be demolished, and then what the future plan was. I don't want any of those to be generic off the internet type drawings. I want them to be something that I've paid someone a fair wage to go in, study, to have accurate, and then present to the bank. Because what the bank is going to do with that that plan is build an appraisal that tells me how much they're willing to give me. So it's a real world example. I bought 4 properties for $132,000 in 2014. I had the properties drawn up, and one of the properties appraised for enough to pay for all of the properties. And what that meant is that instead of the bank giving me a loan against all 4 properties, I was able to take 3 of those properties free and clear, and only one of those properties were needed as collateral leverage to pay for all of them. But that was only possible because I was able to show the bank with clear, accurate architectural drawings what would exist there in the future. And they were able to build a realistic appraisal value based on those realistic plans. So I say that to say it's really important that you value the architect's work, because they're usually the one that can build the bridge to you getting the right value, which gets you the right loan to value ratio, which may make the deal where you don't have to bring any money, or it minimizes the amount of upfront capital that you have. And for anyone who's saying, well, why would I want to do that? Because I have plenty of capital. Keep in mind that in any projects, there's always, oops, oh, you fill in the blanks. So you want to always keep your capital ready to close the gap. And then more importantly, you want to keep your capital in the form of seed capital, so that even while you're building project A, you're able to take your capital out and go and plant seed for project B. That's a essential and necessary move. But architect, then you're going to need a surveyor, and then you're going to need I would say 3 contractors, because you want 3 competitive bids. And then based on those 3 competitive bids, you don't always want to choose the least expensive. You want to always choose the one with the best value. People are going to make recommendations on value engineering. People are going to make recommendations on the most, the latest technology and what's the most appropriate sort of approach to this project, just not the standard status quo kind of approach. But once you have the contractor, then you want to move forward with finding the lender. Now, to me, that's the most important part, because understanding how banks work and what makes a lender say yes versus no is usually a place where people misunderstand opportunity. So in my opinion, if you take a deal that makes 25% return on the money or better, there's very little reason for them to say no. The only reasons that banks say no is because they may have had limitations on how much they can put in a certain type of construction or in a certain bucket. You were not aware of that, so you took that to a bank that had already done as many single family or as many apartments or as many hotels as they wanted in their sort of portfolio mix. So you heard them say no, you thought that meant it was a bad deal, you walked away from it. Often it meant that they couldn't do it. So I totally would recommend that if you're a high income earner, to build relationships with at least 4 different lenders, and to keep $25,000 or more in 4 different banks for a period of time that makes them pick up the phone and call you and say, hello, Mr. Harrison, we see you've got money in the bank. We see you haven't done anything. We wanted to know if we could be of service to you. Trust me, if you do that, this will happen without you doing anything. What that does is it puts you in a position where the banks are trying to bring their money to you and trying to get you to bring them business, because no one in the bank is paid by the bank. They're all paid through the interest and fees that they pick up off of our money. So that, again, is a tangible, realistic strategy that puts you in a position to go from, here's, Brenton, who owned his own practice and he's a dentist and he's just made money, to here's someone who's in 4 different banks, and those banks are trying to figure out, how do we help you use your money to make not only you more money, but also us more money. And that's the perfect way to begin the conversation of, oh, thanks for calling me, Fifth Star Bank. I was just interested in buying an apartment building, and I've been partnering with some local developers, asking them for opportunities. And I want to know if we can come down and meet with you. Oh, sure, no problem. We'd love to meet with you. Matter of fact, let's pick you up and we'll take you to lunch. That's without exaggeration, the way that it typically happens. The bank paying attention to who has what in the bank and whether they're doing it or not. I am, my personal opinion, totally against having a lot of money in one bank when you can spread it out and get multiple banks give you free accounts, but then also to begin to try to sell you their services. I personally like to use farm-based banks because they manage a lot of subsidized capital. It just means that the farmers are going to be moving money whether they had crops or not, and those bankers are trying to figure out how to use that farm money for things other than farming because the farmers can only make so much of a return. So as an answer to a question that had been asked yet, or how would you begin, that would be one of the ways to begin and one of the types of banks that I would begin to build relationships with. And I have 3 or 4 names that I could share with you, but Portland, Tennessee is one, Western Kentucky, Bowling Green, Kentucky. I'm talking to areas where they're growing corn and not much else is a great place to start. But I have another question that says, what are some pitfalls, example, money loss or developments gone wrong, that you've come across during the real estate process and lessons that you have learned from the pitfalls? I think fear of these things keeps many novice people out. I first of all, I agree with the last statement of that question. I think that's very purposeful. That's one of the reasons I start with the notion of seed capital versus fruit capital, because the fear of losing the seed hopefully is less. And I think that there's no lesson that you can learn better than when your money is actually on the line. So I'm just kind of answering those questions going bottom to top. Fear comes with it. That's why, similar to loaning people money, don't lend out anything you can afford to never get, you can't afford to never get back. That's the way I feel about the initial development. Now, as a personal practice, if I put $10,000 into a deal, I got 12,000 out. My next deal, I'd put 12,000 in. If I got 20,000 out, my next deal, I'd put 20,000 in. So theoretically, I'm still just using the first seed capital of the 10,000, which is one of the ways to incrementally grow your ability or your risk tolerance in terms of amounts without actually multiplying or continuing to increase the amount of money you're sinking into real estate. Some of the pitfalls that I've faced are, I think, usually around either sweetheart deals or personal pet projects. So there is a diminishing return where the opportunity overlaps with the expenses, and no matter how much you try, this project will not generate more money. So I'll give you an example. Memphis, Tennessee right now is a hot market. It's great. You can go to Memphis and buy property for pennies on the dollar. I mean, I've in the past 2 months bought 8 properties there for less than $6,000. That's no exaggeration. It's tax sale properties that have been dilapidated. Some of them are structures you'd have to immediately demolish. It's just a number of things. But no matter what you build on any of these projects, on any of these properties, depending on where they are, the amount of rent you're able to collect is still controlled. So if I go and spend $500 on a property and put $12,000 to $20,000, it's a great deal. Bought the land cheap, put an improvement on it cheap. But unfortunately, I can only get that $20,000 back $500 at a time. So that is a micro example of a pitfall where somebody is willing to take greater risk because it feels like it's less and it's cheaper. But what you've done is put yourself in a position where the same $20,000 that could make 8%, 12% per year in a $100,000 deal that you only own 20% of, you put where you own 100% of something that you can only earn $500 at a time. To me, that's an example of winning and losing at the same time. And people sometimes don't accurately measure what it means to make $20,000 back $500 at a time. I mean, that's a kind of a slow return. Some of the development risk gone wrong is working with people who have misrepresented their competency. So someone may have, wholesalers are a great example of that. So yeah, man, I have a deal. It's ready to be closed. We've set the price, and before you know it, you're in a deal. You've got a bank involved, and what you're now, since you're working through a third party, you dealt with someone who's, put a contract in place for an amount and then increased or multiplied the amount when they brought it to you. And what happens when the bank begins to study it, it doesn't appraise for enough to make the deal work. At that point, you've wasted your reputation. You spent some money on appraisals, on land surveys, et cetera. And what you thought was a cheap deal is actually not even a deal because it doesn't appraise and it doesn't even make sense to do for a bank. But that's one of the things that you would rid yourself of, because you want to find banks and developers that would work with you to understand the opportunity, not just to look for a low cost, high return situation. Where in Nashville, I can tell you there's not many of those that are real. Right now, what you would want to look for is something that's stable. So instead of buying a good value, what you're actually doing is buying something that may be cash flowing right now. So a few years ago, the Apple Annie Inn was a small motel on Dickerson Road, was up for sale. Well, the only thing that's happening is the guy's paid for it. He owes no bank. He's making, $22,000 a month off of it, but he wants to go build a $4 million hotel. He can make $40,000 a month. So he's willing to trade the $22,000 a month for the cash to go and build the hotel. Here, you're not buying a deep discounted deal. You're just trading, he's trading this long-term money right now for a short-term windfall that will get him to future long-term money. Those are really solid, good deals to find. Whereas someone is actually selling their cash flow, it's not a big deep discount, but it will pencil with the bank because the bank knows for 6 years he's made $22,000 a month. We're not thinking that's going to change in the 7th, 8th, or 12th year. So that's solid. And by the $22,000 a month, you can afford to pay all the staff, pay all the expenses, pay us, and still have 20 to 30% net operating income. Those are examples of what will work, but misunderstanding that by trying to find a deep discount, to me, is usually a sign of a pitfall. I'm very rarely looking for a deep discount, just looking for a stable opportunity. There's so many ways things can go wrong. I've tied money up in deals where people thought they would build it and sell it. They didn't. They actually built it. And since they couldn't sell it for the right price, they had to hold on to it and rent it. That was an example of losing the time value of money. So I don't lose the money. I still have the money, but similar to the Memphis example, I don't have my seed anymore. So my seed capital is tied up in a project that I thought would be a 9 to 10 month build, but now it's in there for 2 years because we had to wait 24 months to let the values go up enough to sell to get to the right price. And by the way, over that 2 years, we were still paying interest-only payments over those two properties. So virtually, what we took in rent, we paid to the bank just to hold the loan open. So that's an example, again, of it's not a loss because you still have the money, but it's a loss because you didn't make the return you wanted in the time you needed, and then you didn't have your seed capital to take to the next project. So that I would measure that as a loss because my seed capital was still stuck in the ground after the project was quote unquote complete.
Another question that we had, we have a person who submitted a question who was left a family house.
Mm-hmm.
Their wife wants to, renovate the house. Renovate the house and sell it. And the person who submitted the question is wondering if they should just sell it. Like, if you have a house or a piece of land, how do you make the decision of where do I just take the money now, or do I try to make it more valuable and sell it? Like, what are some decision points or metrics you might use?
That's a very excellent question and really a common a common challenge. I'm always going to recommend studying the highest and best use, i.e. the highest and best return, before making a decision like that. In that scenario, if that house is in Nashville or in Middle Tennessee, I know from the market competency be it's going to be considerably more valuable to invest in renovating it to a point, and then selling it. For example, in a renovation project in Nashville, for every dollar you put out, you make probably $7 to $9 back. So here's a house that was left to Miss Jenkins. Miss Jenkins owes nothing for it. It was left. All the taxes were paid. It has a roof that needs to be replaced. It has an HVAC system that is past 15 years old. It needs to be replaced. And the interior has worn out carpets and floors. The $20,000 it would take to put a new HVAC system in there would pay you back that times 3, depending again on the location in Nashville. It may be 3, it may be 2, but it's absolutely going to pay you back. Painting the house, renovating the floors, provide new floors, fresh coat of paint, and a new roof, like those, and then new bathroom fixtures. Those 6 to 7 items, for every dollar you spent, I would comfortably estimate you'd get more than 3 back. Let's just be very conservative and say 3. So that meant if I were having that consultation with the husband and wife, we do a market study on the area. What is the house selling at per square foot? What is it that we could get per square foot if we came in in the bottom third of the market? So again, in this scenario, I wouldn't try to create a property that existed in the top half. I just want it to be, if it was $200,000 or $200 a square foot, I want to sell it at $180 a square foot. So I want to give someone a bargain and a deal, knowing that I would get a multiple for every dollar I put into it. That would be the perfect scenario to me, because if you have the capital, let's say it was $40,000, if you had the $40,000 to put into it, and we're able to raise the per square foot price from 180 to 240, by all means, you're going to get that $40,000 back. It's very rare situations where you would come out better just selling it as is. But if you determine that you wanted to do that, I know a guy. I hope that's not inappropriate, Brenton.
So those are the submitted questions that we had. If we don't have any more that come in the next 30 seconds or so, then we'll close up shop. But we definitely thank you for the knowledge you've shared thus far. It says, thinking of underserved communities, do you see these areas as real estate opportunities?
Oh, it's a great question. I do, but I see them most differently than other developers. So I believe in community organized revitalization. This weekend, I met with families that were in the North Nashville area of the Osage community that was damaged by the tornadoes. They've used insurance money. They put their homes back together. They're safe and stable. But now they realize that, we've got 4 or 5 properties. We don't really want to be in our rental market anymore. We'd like to, tear these homes down actually and redevelop new structures so that we can sell them, have money for our children, put them into retirement accounts, et cetera. I think that to me is what I see in underserved communities. I'm working with existing owners to help them understand their options, all the options except selling. And I think, I'm on a personal soapbox. This is important to me because I think when the bottom floor lifts in underserved areas, we all sort of benefit. So that's my immediate take on it. Now, from an investment standpoint, I think there are real estate opportunities that are win-wins. And for example, I am aware of District 2, which is in the North Nashville area of Buena Vista, sort of Bordeaux, where there are several property owners who've gone to the city with SP asking to build 4. And then the city says, no, we actually have this design for 12. So we won't approve you to build 4, we need you to build 12. We need to have larger density in these areas because we want these areas to be walkable. So this is an area that's underserved in the sense that there's no development there, there's not high income, there is not commercial developments there. And there are property owners who want to do something, but they don't have the capital to build 12, they have the capital to build 4. That's a place where I like to bring property owners and investors together. So then the city can get the satisfaction of saying, yes, we've got the 12 built and person A got the 4 that they wanted and person B got the 8 that they invested in. That's a very savvy kind of move. It takes legal structures. If that were 1012 North 5th Avenue North, it would be the creation of 1012 5th Avenue North LLC. You own 33%, you own 66%, because out of the 12, that's the breakdown. That's how I would responsibly encourage someone to enter underserved areas, looking for opportunities, to see your capital and see your agency as something that helps people achieve the highest and best use of the land without taking opportunities from people that may not have the competency. And I don't think that that was the nature of the question. I think that's just something that we know has happened and is happening, but it's important to, in my opinion, let people bloom where they plant it and get the value, while at the same time getting the value that you can. I love it, love it, love it. And I don't know, Brenton, you can say more about what's appropriate or not, but I am a connector as well. So to the degree that these things come back before me, I post things on the board here at the local distro and connect people. Because the person who wants to do those 4 is waiting on the help to do those 4. They're not interested or concerned about who gets to do the 8. They just want to be able to do the 4. And that is a real need in those underserved areas.
It's very helpful. I appreciate the insight shared and all the wisdom that was shared. Thank you guys for tuning in. Like I said, we will, about a week from now, send out the recording of this call, but also a summary if you don't want to watch the whole thing twice, but it'll be first for some of the people who watch the replay. We will also submit contact information. Will, I love you to death, but I have to give the compliance disclaimer that this is not a recommendation from us for Will's services, but we will, as requested, share his contact information for anybody who wants to reach out to him and get a little more of his expertise. Do not feel, if you choose to take that route, his expertise is not limited to Nashville. So no, we're spread out all over that are on this call. So if you want to reach out, I'm sure he will welcome that. And Will, for people who are looking for, you talked about AM/PM solutions, but can you give a little bit about how you partner with people who are just wanting your expertise in projects
Sure.
they have interest in?
Yeah, so AM/PM Solutions Incorporated is an asset management, project management business. And I work to help landowners and investors, landowners develop and improve their properties, investors find opportunities to invest in, while at the same time gain experience and understanding of the development process. I usually have the desire to walk with you through 1, maybe 2. And then after that, my hope is that you would be able to move into that 3rd one and you would be an advisor and I can just support financially in something that you're doing. That's just the way that I work. I like to grow together and create opportunities where the people who are making money together can also learn together. For the people who are not in Nashville, my work has included DC, from DC, Seattle, New York, Puerto Rico. In the hotel development space, I've built in 42 different cities across the nation and 13 different states. So there's some threads of development that are the same no matter what city you're in, and there are places that you can get the right intel. So if you're not in Nashville, and I apologize for not being clear on that up front, it would just be a period of studying where your specific markets are, what the opportunities look like. Some of those are through data from the sales and transaction reports in a city, but most importantly is through working through some of the civic organizations, i.e. your Chamber of Commerce, some of the realtor associations, and then using that as a good starting point to understand what's happening in these markets that are thriving across the nation. But again, I'd be happy to work with anyone. I'll say my contact information for the people who will view it later. It's William.A as in Apple, .Radford, and Radford is RADFORD, Romeo Alpha Delta Foxtrot Oscar Romeo Delta @gmail.com, or wradford@ampmsolutionsinc.com. That is correct. And then my personal cell phone number, which is the best way to get me 22 hours a day, is 615-497-4647. I don't talk, and when I'm in the car, I'm picking my kids up or dropping my kids off. Any other time, you can just about get me. And it's my pleasure to be with you tonight.
All right. All right. Thank you so much. And we will talk to you guys soon. Have a good one.
Thank you for the opportunity, Brenton.
Oh, absolutely.